Hello and welcome to this edition of the Monday, June 22nd Bourdier Report. Habemus Pactum, or rather Habemus Memorandum. Of course, the US-Iran issue dominated the markets last week with the signing and the still chaotic start of discussions in Switzerland. This topic is extremely important. It has led to a sharp decline in oil prices, now at $75 to $80 per barrel, which is 30% below the peak of recent months, and has resulted in a collapse of inflation expectations, which, as you can see on the left, have returned to 2.2 to 2.3% in the United States. This has brought real rates on the right to over 2% and even 2.7% at 30 years, levels that we consider attractive from an investment perspective. Our scenario now indeed incorporates a higher probability of normalization. Donald Trump and the United States, who will be the losers in this situation no matter what he says, are in urgent need of it. And in this context, we believe that Kevin Warsh managed the start of his chairmanship of the Fed well last week. His message, based on economic figures, is seen as more stringent, which will help better anchor inflation expectations among investors. In the short term, this translates into a market that is revising upward its expectations for the Fed's rate to 4% by the end of 2026, which remains a drag on the US real estate market in particular. As you can see on the right, it continues to struggle with housing starts, building permits, and developer confidence all still depressed. But it also helps to prevent a rise in long-term rates, which is positive for the economy in the medium term and positive from a market risk perspective. In this context, it was the Iran issue that dominated and allowed the market to shift back into risk-on mode, leading stocks to rise by 0.5 to 1% in Europe and the United States and by more than 4% in emerging markets, once again favoring technology. All of this happened without bond yields being disrupted by the speech of the new chairman of the Federal Reserve. In short, we remain constructive on equity markets and have increased our positions in more cyclical sectors and stocks, which are positively impacted by the decline in energy prices. This is the case, for example, with Deutsche Lufthansa here. The leading European airline will benefit both from a normalization of traffic if a lasting agreement is reached, and above all from the sharp drop in kerosene prices, which remains its largest variable cost item. For example, it accounted for 18% of revenue in 2025. Overall, the outlook for our investment scenario is becoming clearer. And in our view, the performance of risk assets would strengthen in the second half of the year, assuming the increasingly likely scenario of normalization in the Middle East. That's all for today. Thank you for your attention. We wish you an excellent week and we'll see you again next week.